Join me in welcoming back your host, Greg Baer.
Thanks. So really excited about our next panel on collaboration. We have a great group of folks. Bharat Masrani leads one of the world's great banks. He's also been a great friend to BPI and to me. He's on our board. He chairs our Global Regulatory Policy Committee, and I think he has a lot of interesting things to say about collaboration. Ryan McInerney is president of Visa, where he's proven to be an innovative and thoughtful leader. Ryan and I previously worked together at a bank where a lot of people previously worked together. And Noah Breslow, I actually did not know until this week. His Twitter account labels him a relentless optimist. I usually react very badly to people like that, but he's actually proven to be a joy. He also incidentally leads an extraordinary company filling a really important market need for small businesses. They will be moderated by Deidre Bosa. I had the pleasure Tuesday of introducing her to Bharat. She then informed him that she was from Toronto. I immediately repaired to the bar because I knew there was going to be an extended discussion about the Leafs and snow and whatever it is such people talk about. I'm hoping they don't do that again now and instead focus on partnership. But please welcome our group up to the stage.
Good morning again, and yes, I could easily fill an hour talking about Leafs and hockey, but what we're going to talk about is much more interesting. At least we'll make it so. Thanks, gentlemen, for being here. It's been wonderful, and I think this is the biggest panel so far, so I'm looking forward to getting all of your different viewpoints. We've talked a lot about partnerships. That's the theme of this conversation, but it's been a theme running throughout the last day of these panels, and I'm sure in some of the workshops. I asked Dan Schulman yesterday, I think it's so interesting how this has evolved. It used to be thought that the fintechs would challenge traditional banking, and it was nice for us in the media because you could kind of portray it as David versus Goliath, but now it's just as interesting because of all these partnerships popping up. But Brad, I want you to start. Tell me a little bit about the evolution and be candid here. Is there ever a time that you were threatened, or you felt threatened by fintech, or your business felt like it could have a real challenger in some of these upstarts? And how do you feel now about where the relationship is?
If you look at the history of banking, there's always some kind of threat at some point. Online banking, ATMs, whatever you want to think about historically. So when a new emerging technology comes up, there's always the fear factor that something major is going on. But I think what has evolved here is, many of the fintechs have gone from a B2C model and say, how can we partner with banks? And banks have realized that because you say, let's be open here. There was a time when banks were, more clunky, probably not as responsive to customer needs, probably slow. And there was a space for a new entrant to say, I can solve these problems for you. And so when that started to happen, especially with the way the technology has evolved, how quickly things can be done, digitization, I know there's a lot of talk about artificial intelligence and the like, that you could really, really increase the pace here and the cycles you can generate. So I think banks responded, generally speaking, either doing it themselves or partnering, and that's the model that has emerged. And for TD, we've partnered with some terrific companies and have done very well. And where appropriate, we've also acquired fintechs out there because it made some more sense for us than to build it ourselves. So I think that's the model that is emerging more. That doesn't mean, I know Noah also competes with banks, in his small business sort of lending platform, but he also partners with banks. And so, some kind of a hybrid model is certainly emerging here.
Ryan, talk to me a little bit about the evolution, because Visa and Mastercard arguably have benefited, very much from the partnership model. Talk to Dan Schulman again about his decision to have payments processed to you guys as the rails. That could have looked very different. How did you get to that point?
Well, our whole business is about partnership. We've been a partner with TD Bank for 50 years. We've been a partner with Noah's company for a year now.
We're one of your founders, Ryan. We were one of your founders.
No doubt about it, as with other banks in the room. So our whole business has been based on partnership, and that's how we kind of go to market day in and day out. I think, what's happened in the last couple of years is it has been a very smart evolution of the industry. I think people realize that by unbundling kind of their business stack, like Barrett was mentioning, you can be smarter, you can be faster, you can have more strategic options by partnering with people. And you've had a lot of fintech players who did start going with a B2C model. It's expensive, it's hard, and they've realized they can create a lot more value by partnering and enabling different solutions. So I think it's a natural evolution. I think it's a very smart evolution. And you said it may be just as fun to report on. I'm not sure that's true, but I think it's better for business.
It is. I will say it is very fun to report on because you see how companies work together and share. And I think that you've had a lot of really interesting fintech companies come up with the supportive bank. So you don't get the headline, but that's not what we're looking for. We want the stories, and I think there's been a lot to report on over the last few years, just in a different sense. But when I think about all of the steps that happen when I make a payment here, and we were just on stage with Ant Financial, all the very much less steps it takes to process a payment in a place like China when you have less layers. What does that come at the expense of when you're taking a piece at every step of the way, and that's allowing the companies to share and sort of win from all of this? But what does it do to the merchants and the consumers? Is that something that you think will continue to evolve?
Well, I think what happened in China, China started in a very, very different place than North America, Canada, United States. There were three things, if you go back 6-7 years ago in China, that didn't exist. You didn't have long-tail acceptance. China UnionPay, who was the domestic network there, didn't build out broad-based acceptance like you have here or you have in Canada. You didn't have kind of broad-based financial inclusion. And quite frankly, the products didn't work for e-commerce. And so you had this explosion of Ant Financial, of what Tencent's done with WeChat. It's all very, very impressive. But the US market, the Canadian market, they're very different. Broad-based payments acceptance. Payments do work very, very good. A lot of the companies that you see, you mentioned in one of the earlier panels, Lyft going public tomorrow. These companies have built their businesses on kind of the efficient payments architecture in North America. You couldn't, Lyft wouldn't work if everybody here didn't have payment credentials that work seamless, easy, in a very secure way. So they're just starting in a very different place. And I think as payments continue to evolve in the US and North America, you're going to see more and more and more innovative business models that are built on top of what the banks have built.
And I know Carol said that their ambitions here in the US were simply facilitating payments for tourists, but how much time do you spend, and Brett, you too, spend thinking about what if Alipay were to all of a sudden allow US bank accounts to get on that platform and essentially cut out some of the middlemen in America?
Well, firstly, we have something called regulation here, which is a little different than in other countries. And we have legacy systems that have worked, quite well. And when you think of US, Canada, Western Europe, things work very well. And so we got to just be careful that let's not emulate the next greatest thing, because we found that a lot of these things really don't work from a safety and soundness perspective. Because at the end of the day, I think all three of us, our business model is we're trying to provide legendary customer experiences. And how can we do that? And let's not forget, that is what we are trying to do. So yes, of course, there's adoption of technology, which is a lot different today than it was maybe 10 years ago, 20 years ago. But I don't think anybody is going to say that in North America, that we've not embraced either as incumbent banks or newcomers, that we are providing those experiences that our customers want. Of course, the regulation will change when you have a newcomer coming in. Perhaps they might disrupt the old way in some respect, but I wouldn't expect that there's going to be a massive change in how we operate in North America, because it works. What are we trying to solve? It's as fast as in any country that I know of. And from a customer experience perspective, sometimes this innovation for the sake of innovation is an interesting notion, unless there's some purpose. We believe we want to provide innovation which is relevant to our customers. It's going to provide those personalized, connected, legendary experiences. No point creating the next toy that nobody wants, because it just looks good, it looks great at these conferences, but that's not what we are. So I worry a little bit that, whenever we see something somewhere else, let's run at that. That's got to be the latest thing, it's the greatest thing. But let's also understand, at the end of the day, we are a financial system that is probably the safest and the most well-regulated. Yes, we've had our issues, but all of us are still standing, and we are here, and we serve millions, tens of millions of customers, I think in a decent way, and frankly, it's well accepted.
Right, you already have the distribution, and no, I'm saving you because you basically wrote the book on partnerships. But first, Ryan, I just want to get your final thoughts on that. How much time do you or don't you spend thinking about the Alipay model?
We spend a lot of time thinking about all our competitors. And, we have a great set of competitors today. We have lots of different people that are trying to enter the payments market here and around the world. Competition ultimately makes us better. It delivers better solutions for, our clients and their customers. So we spend a lot of time thinking about what they're doing and what all the competitors are doing, and it makes us better. Okay. And ultimately, forces us and helps us deliver better products and solutions to our partners.
Yeah.
Okay, Noah, finally, yes, you guys have been partnering with banks, and you even have, a unit within your company specifically meant for these partnerships. How did you get to that point? When did you decide that we want to be working with banks? That's in our benefit. Walk us through that thought process.
Yeah, it actually was sort of a 10-year evolution, believe it or not. The original OnDeck business model was actually selling technology to banks. And so we went and we actually signed up about 150 community banks. This is 2008, 2009. Of course, bad timing, middle of the financial crisis, not a great time to be calling on banks. And banks said, listen, it's not obvious to us that you know what you're doing. Please come back in a few years once you've sort of proved out this model. And so, $10 billion of loans later, we were able to then walk back into banks and say, listen, we think we have an idea of how to do this online small business lending thing. And we were fortunate in some ways that JP Chase decided to take a bet with us back in 2014. And it took us a couple years to get live. And I think that's one of the tricks of partnering between these smaller companies and these bigger institutions that we can get into. But we brought that program live, and ultimately it gets back to exactly what my co-panelists are talking about, which is customer experience. We had a legendary sort of customer service call in the JP Chase program where we had delivered someone a loan. It's about 6 clicks online. The money hits their bank account the same day, but before the money hit the bank account, the person called in and said, which branch do I go to pick up this bag of money? So just it takes a little while for customers to sort of almost appreciate that they can get a $200,000 loan now online safely with the right risk tolerance in minutes. And so with customer experiences like that, the net promoter scores are in the 80s, so very strong customer satisfaction. On the strength of that, we decided to set up this ODX subsidiary and really dedicate it to a different business model. We have a B2C business model, loans money to small businesses. It's got a lot of scale to it, but this bank model is different. It requires different investments, different technology sometimes, and we were fortunate to land PNC, so now we have 2 of the top U.S. banks. We have a great pipeline of banks on the way, but that's what it was. It was a bit of a journey, starting with banks, then going away, proving the model ourselves, and then coming back again.
In your case, it made a lot of sense, but not for every fintech company. And when I say you wrote the book, I found a guide on the OnDeck website on a guide on actually how to partnering with banks and comparing it to a marriage. You said it here, and I don't know if you wrote this, someone at the company, an intense level of trust and commitment are required from the people involved, and the relationship takes ongoing work and attention in order to thrive. Explain that a little bit, that analogy, and how you reached that point. And, marriages at the end of the day, they're a bit of a leap of faith as well.
Yeah, no, and I guess in a weird way, there's a polyamorous aspect because we have partnerships with multiple banks. We just not go there.
Yeah, we won't go there. It's true.
With the sincerest intent, we are partnering. So, look, I think there's this concept that with technology sometimes, I'm a technologist by training, is you just drop the technology in and you walk away and it just sort of, it starts itself and it runs itself and the programs grow on their own. And that is absolutely not the case. And so what we've learned is that, there's two elements to it. One is you have to drop the technology in with all the safety and soundness requirements that a bank needs to sort of scale a program, whether it's business continuity and data security and compliance, model governance. So there's a whole bunch of wrappers around that you need. But ultimately then it requires a relationship between people. And we've actually found that banks can benefit from our expertise in designing online credit models, designing marketing campaigns. We even provide the sales and support capabilities for both JP Morgan Chase and PNC. And so it's really the entire kind of ecosystem of skills, and it becomes a relationship. And that's what you need to really make these programs grow, as opposed to being things you show off at conferences that don't actually get used by people.
Or a press release.
Exactly.
Brett, talk to us a little bit about that, especially on the other side, when you're looking at a company that may fill a need, but what do you have to consider cultural fits and some of the other things? So how do you make that decision, especially when it comes to partnership versus, and you mentioned this, versus acquiring a company?
Well, so in our, of course, we identify a need, and let's start with the basics here and say, can we build it ourselves? And if we do, how long is it going to take? Is it going to have all the features that our customers are wanting? And if we think that there is an outside player like Noah or whomever, that they are a better solution, then we look at it in a couple of ways. Firstly, I mean, we have partnered with many fintechs, but it's not just the partnership where we take their technology and apply to our 25-odd million customers we have in North America. We want to make sure that can we make it the TD way? Can we, from a security perspective, experience perspective, is it integrated with the rest of our bank? So the company we are dealing with, we have to find a cultural fit here. Do they share our values? Is it as important for them as to what happens at the customer level than to get the next check from us? Because that's not what we really want here. So we use various models. We partner where we have no other relationship except a partnership by agreement. We would invest in companies. We would own, some portion of that company. And where it makes sense for us, and Layer 6, and I know Tommy is here, and he did a session and back there on AI. Well, this is a terrific company. I mean, they were working with us. They were partners. I met with Tommy and his team, and I say, what's not to like? This makes a lot of sense for us because, for TD to build that capability, it probably will take us 5 or 6 years, and that's going to be too late in that area. So we acquired the company. Now, perhaps if we have time, we should get into it. How do you manage a company like Layer 6?
You're doing my job for me. That was my next question.
Yeah, but within TD.
And you talk about integration. We hear a lot about integration, but perhaps some fintechs would argue that that's not necessarily a great thing. You want to be able to hold on to your culture and not maybe, pick up the TD culture, and that's why you're acquiring them anyways, right?
Differentiation? Let's be, I don't think today if I was applying for a job at TD, I'd have a good shot of getting it. The type of talent we're acquiring is engineering.
I'm interested in unpacking that.
But it's true. It is true. Business degree, sure. A lot of people have business degrees these days, but it is AI engineers, anthropologists, design engineers, facial recognition. You walk into TD. You're from Canada. I know you were born in Toronto, and hopefully you had a TD account when you were there. we offer those services in the U.S. as well, just in case you were not aware. But the point...
I think you are the perfect CEO.
Point being that, it's a different type of talent. Tommy is here. People should ask him. I think he's going to do a session there. What does it feel like at TD? I mean, it does not feel like a traditional bank when I go visit him. It's a different atmosphere. Rizwan, our Chief Digital Officer, is here. We have transformed ourselves as an institution. And I don't think we are the only ones. I think most banks are finding this. Some are ahead, some are not. And so yes, it is more challenging when you've got 85,000 people, 164-year legacy, you've got regulation, you've got compliance, 25 million customers. So it's complicated, but it's not impossible. And I think, in our case, I feel really proud regarding our culture, which is embracing the new ideas. When we buy companies, the management group stays with us. And in fact, they run the show here. I'm the only guy who's the old timer. Otherwise, everybody is nearly acquired in my bank. So I think we adapt, and I think that is sometimes underestimated is what banks adapt and how they transform themselves into today's reality.
I have an idea for you. Next Fintech Ideas Fest, we'll get you a Patagonia vest, some Allbirds shoes, and we'll just dress you like you'll fit right in here, and you can go back to Toronto and your staff will love it. You'll fit right in.
Not to name names, but I thought the interesting crowd that I saw the past couple of days here.
You're not the first one that has said that.
Yeah. I've got a Patagonia vest in my backpack, actually. We can just give it to you right now.
Perfect. We could probably dress you right here.
Like always have one here, on demand.
You bring up a very interesting point, and Ryan, the Visa office, our bureau at One Market for CNBC is just a few floors
just
above.
right below you guys.
Exactly. And I love coming down and seeing you guys have a whole space dedicated to innovation in payments. And I always find it fascinating that you guys, when I first arrived here, I found it fascinating that you guys were here in San Francisco and not in New York like some of the others. How important has that been in transforming Visa for a digital era?
It's very important. I mean, you see what's going on out here, and Barrett mentioned this, but I'll pick up on it. Like, talent is at the core of what we're all doing. The whole industry is having to reinvent itself. We're all having to reinvent our companies to continue to push the boundaries on innovation. And so, at Visa, we love being here because we can attract talent. This is a magnet for engineers, for designers, for people that are looking to change the world, like Noah's team. But it's also, it's a real challenge for us to continue to reskill and to retrain all the people that work at Visa. We have made a big effort. I think we've taken you through some of it as well. We've launched our own Visa University. We have, some job families have voluntary courses, others have mandatory courses. You work your way through all different types of skill levels, allow people to get jobs, different opportunities in the company. And we've actually found it's a great opportunity. We've opened it up now. So we have clients that are coming and going through our university programs. We have government officials from all over the world that are coming through our different training programs. It is tough to keep up, not just with the industry and what's happening, but with, making sure that our teams have the skills to really lead the type of innovation efforts that you're talking about.
Is that, speaking about talent, and you can do acqui-hires, but bringing people in to have that sort of innovation organically, how have you found that in the recent environment? It used to be really cool. It still is to work for Facebook and Google and Apple and these big names, but there's been a shift. There's been some blowback, especially when it comes to privacy concerns and with some of these companies. Have you found the hiring environment has changed, that maybe it used to be the banks that weren't very cool to work at? Do you find that pendulum swinging back at all?
Listen, it's a competitive marketplace. It makes our system, very efficient and great. But in my case, at TD, I can say we are not having any issues with our brand or saying, oh my God, you're an old bank and old style. I don't think we are finding that. Southern Ontario, where the bank is headquartered, in the Greater Toronto area, now is the second largest, producers of engineering talent, and so TD is well known there. We've been there for many.
And I think the big tech giants they're very
all of them
up
are
to
coming
speed
there.
with that, and they're coming there.
But it's a good thing. I think it's a good thing that we're having everybody go out there. But to say that we are not an attractive place for this type of talent to come, I think is an overstatement. Frankly, of course we have to compete, and some business models are more fashionable, more sexy in the moment. But that doesn't mean there's enough people out there. And so I'm TD, I can say it's not as if that we are not able to attract the talent to do what we need to do. And where we think we have a gap, getting back to your partnership model, some of these partnerships we have, and a couple of the people have already presented here, was because we couldn't get the talent. So we will figure out a way to compensate for it, and I think it works very well.
No, I didn't know, but I was happy to hear that your Twitter handle's the Relentless Optimist, right? Makes sense, this guide to partnering and this beautiful marriage. Let me ask you to take off your optimist hat for a second.
It's hard, but I'll try. Yeah.
If you had to write a guide on when it's not working, when to walk away, what would that look like?
It's a great question. And so, look, I think despite the relentless optimism and the materials on our website, look, not all partnerships work. And we couldn't sit here with a straight face and say, I'm batting 1,000 in partnerships. I'm sure you guys have had your share of other ones that didn't work. So I think what we've learned over the years is, where you enter the organization structure matters a lot. So we're, on my panelists here at the top of their respective organizations. That is a much better place to begin a partnership in many ways. And it's no disrespect to sometimes an internal champion who might be sort of in middle management. But ultimately, these partnerships require a level of resource mobilization and commitment because you do hit roadblocks along the way. And so I think the top-down leadership, literally it was Jamie Dimon at JP Morgan who got excited about this. And it was the head of retail and consumer at PNC, who's sort of one step down from Demchek, the CEO, who got very excited about this. And so I think those are the types of relationships you need to really ground this. I think that's sort of step one. And step two is really realistic expectations. So we actually do a lot of optimism tempering in our discussions with banks when we actually get a hold of their data, and we do it in a safe and secure way. But we can say, look, here's your customer base. Here's the segment of those customers that could qualify for loans. And then as you adjust your risk tolerances and your pricing and your offer structure, how will that impact the size and scale of your program? And we try and set out realistic expectations for the first year, because all banks are fairly conservative. They want to try before they buy. So I think if I had to sum it up, the top-down sponsorship and the realistic expectations, and when you don't have either of those, I think that's where you start to run afoul of a good partnership. Okay.
Ryan, is there anyone that, because you guys are the rails, it's easier, in some senses maybe, to have broader partnerships. Is there anyone you guys wouldn't partner with?
We make business decisions like everybody else does. So, we want to do business with companies that, are ethical in what they're doing. They're obviously abiding by the laws. We do business in close to 200 countries and territories around the world. So, yeah, we of course make decisions about who we'll partner with, based on the type of business principles, the ethics that we have, the culture that we use to run the company. Having said that, as you alluded to, we have a broad-based set of partners. Yeah. We have traditional partnerships with TD and many banks in this room and around the world where we issue debit cards and credit cards and commercial cards. We also have a whole different set of products and solutions that we partner with a lot of different fintechs. Noah's company is a good example. We have a Visa Direct product where we can run push payments over our rails. And Noah is now, when people are approved for a loan, he's using the Visa rails to send them monthly distributions of their payments. So a very different type of partnership that we have. So we think very, very broadly about the types of players that we can partner with around the world, and think about when there's a capability, a product, a service that we can add value to their company, whether they be bigger or smaller. We're very excited about doing that.
Yeah, maybe just to comment quickly on what Ryan mentioned. We were the first lender in North America to use this Visa Direct rails for funding our customers' loans. And so basically a customer can do 2 taps on the OnDeck mobile app and have their money in their account in just a minute or two. And so I do think sometimes we get stuck on partnerships where it's the fintech supplying something to the big bank. But if you look under the hood, even Dee's presentation just now, under the hood of a lot of fintechs are banks as well. Mm-hmm. And so there is this kind of interesting layering going on in the market where actually some of the banks have these fundamental capabilities or even regulatory capabilities or international capabilities that we don't have. We'd never have the scale to build. And so I think that's another direction for these partnerships, and the Visa Direct is a great example of that.
Can I just go back to your talent question? I wouldn't underestimate the need for traditional banks to change as well in this world, in a sense that, we can bring great talent on the tech side, fintech side, but at the end of the day, we're still a bank. So, how can we have folks who know banking well, who know TD well from a culture perspective, find that sweet spot where they can work together? So culture matters a lot, and reskilling of TD bankers matter a lot, and we pay a lot of attention to it as to how much money we invest in that. We've got lots of programs, including working with universities and other sort of entities outside of TD who would help us do that. So it is not just about attracting the latest and the greatest, but how your own people are being trained and reskilled in this new world. That becomes as important.
I'm very glad you brought that up, because I think it addresses the argument that some critics have of these partnerships, is that you can't just partner your way to relevance, that banks need to think about more of an internal shift and an internal strategy, take a hard look, which I think you just illustrated. Yeah. Let's talk about the big partnership of the week, and that is the Apple, Goldman, Mastercard. Gives you an idea of all the layers involved in these things. One word answer first before we dive into it. Game changer, yes or no?
There are a lot of partnerships out there. Of course, you got to take any
One-word answer. We'll come back.
A lot of them. There are a lot of partnerships there. And, of course, you worry about, Apple is a great brand. In fact, we are on Apple Pay. It's a, terrific partnership for us as well, both sides of the border. But, of course, when there's a new entrant, you're going to take it very seriously. So let's see how it works out. But we shouldn't say that banks have never had competition or there's never been a credit card that is not from a bank. We partner with some retailers and we have co-branded cards out there. So we'll see how this evolves. And of course, it creates a huge level of profile, as it should. So we'll see how it evolves. Give it time. I think some of the people yesterday were talking about as to what value proposition is it providing? Can it work in that space or not? So let's see. But I wouldn't say let's not take it seriously. But on the other hand, I wouldn't say that all the rest of the banks are out of the business.
I think your answer is TBD then.
Yes.
Right?
Yes.
Yes, game changer.
I think here's what I'd say. It's a great time to be.
I appreciate it now.
It's a great time to be a consumer. It's a great time to be a consumer.
Is it Visa?
It is.
Visa?
The consumer in this country and around the world, they are getting more innovation, better experiences, better value. The competition continues to escalate. You've got traditional players, less traditional players. The innovation, the competition is just making it better and better and better, and it's ultimately better for the consumer. And so, I think you have traditional banks innovating, you have tech platforms innovating, all creating better buying experiences, better ability for consumers to manage their financial lives. Competition is going to make everybody better, and I think the winner in all this is the consumer.
Precisely.
If it is a game changer, no, I'm going to give you the most time because you answered with one
Try to follow
word.
instructions.
But I'm not done with Ryan yet. Ryan, if it is a game changer, for Goldman in the sense that it opens up their consumer banking business, in the sense that people really start to use the Apple Wallet and digital payments in a huge way. The fact that Mastercard is going to be the rails for it, is that something that you think will hurt Visa? Is it something you were talking to Apple about as well?
As I was saying earlier, we have great competitors in this country and all around the world. And our competition makes us better. Mm-hmm. So, in any given deal, in any given country around the world, we might win one of our competitors might win one. But the way that I think about it, the way our team thinks about it when they come into work every day is when we see our competitor do something better, smarter, faster, different in some good way for one of our clients, we want to make our company better. And that's absolutely how I think about it, and that's how our team at Visa comes into work every day.
Approaching Amazon, trying to convince them to get a card, and that'd be a good way.
I'm sorry, what's that?
Approaching Amazon by any chance?
As you were alluding earlier, Amazon's a great partner of ours. Apple's a great partner of ours. We do business with all of these different players, and we're doing our job if we're helping them deliver what they need to do in their business. So, in the case of Amazon, they quite clearly their whole goal is to deliver a great customer experience. That's what Bezos' team kind of comes into work every day. So we come into work thinking about how can we help Amazon in that example deliver a better experience for buyers on Amazon. It comes back to what I was alluding to earlier. It's like all of this competition, all of this innovation, it's creating better buying and selling experiences for consumers. Precisely. It's helping drive the economy. It's helping small businesses expand and grow theit's great. It's great for America.
Mm-hmm. Noah, your answer was definitive. Explain to us.
Yeah, look, and again, I'm on a panel with folks who know credit cards way better than I do, but I will say, I have folks on my management team who came from American Express and Discover and Capital One, and so they know those businesses well. And look, what Apple has is a zero customer acquisition cost opportunity here. And I think yesterday there was a little bit of this is anticlimactic, it's not really game-changing, blah, blah, blah. And look, it is a credit card. I don't know if the product itself was super interesting, but I wonder if the business model is going to be interesting, and I think it's less about Goldman and more about Apple. And sometimes people discount Apple when they enter a market and they sort of poo-poo what they're doing, and they stick with it. And I see a lot of Apple watches in the crowd, but people rip the shred off that thing when that was first announced. And so, credit card acquisition costs are a real thing. These are very marketing-driven companies, and here's a company that has, I don't even want to estimate how many hundreds of millions of consumers, and essentially a zero.
With a billion iPhones in circulation.
There you go, a billion iPhones in circulation, and now they have first look at a billion iPhones to market a financial services product. It's pretty interesting, I think.
No, that's how I saw it too. It's less about the credit card and more about the access to data. Apple is and Goldman are going to be able to sell you things on top of that based on your purchases. So Is that something, and I think about that being the Square model too, right? Mm-hmm. Square started with this dongle just to process payments. Now look at what it's doing. It's making small business loans. It has a Square cash card. How do you think about that? And do you think that that's too much of a leap, that they're going to be able to do this successfully with this credit card?
Time will tell. I mean, you got to take any competitive or a new entrant into our space or payments or credit cards or banking very seriously. But, we tend to sort of exaggerate that, oh my God, this got introduced yesterday and this is over for the incumbents by the end of the year or, by next month or whatever. It will evolve. Ryan's point, I think this will probably improve the overall industry. What a value proposition works, it doesn't work. I think your point on acquisition cost, a lot of the incumbents will have to think about, we got an installed base of tens of millions of customers. So our acquisition cost also is lower than perhaps, you might want to do on the small business, in the space we are in. So each one has its advantages, disadvantages. So it's a good thing. I think having more competition is a good thing. And so I don't worry about it from that perspective. But let's see how it works out. What particular aspect of this value proposition is resonating with the clients? And then, can we find a way to provide that if we haven't done so already? So I think it just makes the industry better. And of course, it's a new player, but we've always had new players, in our industry. I mean, TD was not in the retail space in the United States 12 or 13 years ago. Mm-hmm. So we were a new player. So, we got to think of it from that perspective. It doesn't mean that all the incumbents are done with.
Personally, I was surprised to see Randall Stevenson here with AT&T because I wasn't aware of that history, that at one point telcos were going to disrupt the banking system. So I think that it goes to
Or he had a credit card.
Right. So it goes to your point. Good point, though. Let's talk a little bit about, and I haven't got to this question yet throughout the 2 days, but I think it's an important one, and that is the question of bank charters. You have Square, which has reapplied for its license, and as I've mentioned it a few times, because it really isn't going into the territory of traditional banking. And Noah, let me get your view on this first. Do you think that if Square is granted a banking license, that kind of opens the floodgates and that presents any kind of threat to maybe not the big banks, but at least the community regional ones?
Yeah, I think it's a really interesting question. If you look at what happened in the UK, there was a very clear regulatory on-ramp for new challenger banks, and I think 16-20% of now new deposit accounts in the UK are going to these challenger banks. There's like 6 or 7 of them. In the US, that number is much smaller because the regulatory on-ramp isn't as clear. So obviously, everyone's watching the Square application, everyone was watching the SoFi application, and then that got pulled back. But I think, there are a number of fintechs that are at scale, and we've even gone on record publicly saying this. We're exploring a number of different options out there. The OCC has this fintech charter. There are these sort of very tight partnerships that you've seen with Chime, for example, working with a bank behind the scenes. So how close can those partnerships get? So I actually think regardless of whether Square gets the charter, I think you're going to see fintech start to push forward on that line and blurring that line in the next couple of years. It just makes sense at a certain level of scale. And also because the U.S. does have this very unusual regulatory environment where 50 states can act at any moment, and it's actually hard to manage. And so the national kind of harmonization of a charter is a very powerful thing, I think.
Ryan, does that extend beyond fintechs? Remember, it was Walmart years ago that wanted that charter. Do you think that that's still something that could happen? Do you think Walmart, Amazon, some non-financial services companies, fintech first companies, would be interested still in this regulatory environment and having the banking license?
It's not a new thing. I think a lot of people have been looking at banking in the U.S. and how they could get into it, and a lot of really smart people with a lot of resources, and they often come to the same conclusion, which is banking's a tough business. Right? This is not like it on the surface. It looks like a little bit easier, this or that. It's a tough business. It's a regulated business. Barrett's Bank and others, they invest enormous amounts of money in compliance and AML and money laundering capabilities to block what can be a lot of bad things into the system. It's a tough business, and so. I agree with Noah's point. I think there will be more entrants into the banking system in the U.S. Which angles they'll come from, I think, is TBD. But I think, a lot of people have tried this over the years and they've realized that it is a hard business, and the infrastructure and the capabilities and the talent base and others that a lot of these banks in the audience and others have built up over time is really tough to compete with.
Brett, I know the Canadian system's different,
but no, I think in a way it's a good thing, because we need banking-like activities to be regulated like any bank is regulated, because the safety and soundness, AML, compliance, to make sure that the customer's money is safe. All those things matter. That needs to be adequate capital to support the activities they have. So activity-based regulation, if this means, these new charters are going to make sure that happens, that's a good development. So I think we should keep that in mind, that, having a level playing field between a traditional bank and a new entrant doing bank-like services is critically important. We are only as good as the weakest link in the system. And if something happens, you say, wow, how can that happen? And then, people will react. But to the extent we can, let's prevent these problems, because, we need sort of level regulation for the type of activities a lot of these players are engaging in.
Agree.
Now, I know we started off this conversation talking about some of the differences, because we had Ant Financial and PundiX up here. And another thing that's been running through is, when does the U.S. become more of a cashless society? Not 100%, but much further along than we are now, and what could be that tipping point? Brett, let's start with you.
Well, so U.S. actually, the other part of it is still a lot of checks are prevalent here than perhaps they are in Canada.
I know, I wrote my first check within the last few years. I couldn't believe it.
So is cash. So time, we will adapt at the speed that the consumer wants to. There is a reason why checks are, still popular in the U.S., because that's what customers want.
They're used to.
So I think it is important to keep that in mind, that you got to do what customers actually want you to do instead of forcing down a solution. But we've got every tool now. You can pay by your phone. You got a credit card, debit card. All kinds of tools. But I think this thing it's a slower process here than perhaps people might be realizing.
So more or less than 10 years.
Oh, I think so, because it's a huge country. The U.S. is a reserve currency. There's a lot of currency, U.S. dollars in the world. They'll get used somehow, somewhere.
Noah?
Yeah, I think we're already on our way, but it is a slow march, I think, towards a cashless U.S. But I already see, so many people I know in OnDeck's workforce, which is, mostly millennials. They really don't use cash very often, and there's a lot of new small businesses forming that are actually cash-free from the get-go. And so I think when you look at sort of the robbery risk and some of the crime and the, someone taking from the till, there's a lot of reasons actually not to have cash in your small business. And so I think that's a part of it. I think the tools and technologies are getting better. But I do think there's this element, there is a whole generation of Americans that are used to writing checks, they're used to paying in cash, and so that's why I do think it's probably closer to 10 than 5 years, but certainly something that I think is inevitable.
Got it. Ryan?
Yeah, I don't think it's a tipping point. I think it's going to be this continual evolution. There's a lot of things happening that are driving cash out of the system in the U.S. You've got this continued massive growth in e-commerce and digital commerce, and as you know, you can't use cash very well to order an Uber. And so as you have all these new companies that are innovating and creating new business models and creating great buying experiences for all of us, that's going to eliminate cash. You've actually got the physical point of sale evolving in the U.S. In meaningful ways. Contactless and tap-to-pay is starting to roll out in the U.S. And I think if you look forward 6, 12, 18, 24 months, you're going to see behavior in the U.S. looking like a lot of other countries around the world, Canada and many other places, where, at least for the Visa system, more than half of all the way people are paying is tap-to-pay. That gobbles up cash. Right? So if it's easier, if it's simpler, if it's faster, if it's safe, I don't need to carry the cash with me. And then, to the much bigger areas like B2B, you're starting to see real innovation that could drive out paper and checks and invoices and a whole bunch of antiquated ways to pay. It's happening, absolutely happening. It's not going to be an inflection point or a cliff, but we're going to continue to see, I think, marches towards more digitization of the way all of us pay.
In Canada, Ryan's point on technology, TAP and various other innovations that are out there, Canada has it, but there's still demand for cash. It's not as if cash has disappeared from the system, but it is a slow conversion, I think.
Please join me in thanking Brett, Noah, and Ryan. Thank you guys very much.
Thank you.
Thank you.
Thank you.
got up that. Good to see. Right.
Okay, so home stretch. We have a networking break until 10:30, where you can chat among yourselves and eat healthy West Coast snacks, including I'm seeing almond milk chia pudding with mango and coconut, which to me is like some AI food program gone wrong, but you'll taste for yourself. But please repair to the salons promptly at 10:30, and then we're off. Thank you.